Welcome to our Audit Hub. I'm Matthew Monaghan, Audit Director at William Buck. In this video, I am tackling one of the more challenging areas where compliance with the rules and regulations is paramount. This is in the Queensland building space with the regulations under the Queensland Building and Construction Commission, or the QBCC. Builders licensed under the QBCC are required to comply with the minimum financial requirements. The key requirements are: you must have your current assets the same or greater than your current liabilities, and licensees must have the required level of net tangible assets, or NTA, to support the maximum revenue they can earn. The NTA and maximum revenue are linked such that if you have net tangible assets of $156,000, you can earn $3 million in revenue. $480,000 will be able to earn up to $12 million, and so on and so forth. You can find a calculator on the QBCC website to work out what you can earn or what assets you require to earn a certain amount. Net tangible assets is not just the net assets of the company, as NTA is based on total assets minus total liabilities minus intangible assets minus disallowed assets. So all your intangible assets are excluded, and your disallowed assets include things such as any receivables outstanding for more than 1 year, half the value of receivables outstanding for more than 180 days and less than 1 year, recreational and unregistered vehicles, investment in unlisted companies or trusts, your personal furniture, and probably the most important area, related party loans receivable, unless the related party has both positive NTA and a current ratio of at least 1:1. So if you as a licensee have related party loans that you require to count as part of your assets, you will need to make sure that the related party's balance sheet is strong enough to be counted. This area is where we see licensees get into the most trouble. If a licensee is a company or a partnership and doesn't have enough NTA on their own, you may also rely on a deed of covenant and assurance, which allows you to meet the NTA by relying on the personal assets of a covenanter. Importantly, you can only use the deed to meet the NTA requirements, not the requirement to have current assets at least match current liabilities. And finally, when it comes to reporting, all licensees are now required to report annually their results to QBCC. This can just be based off your own internal reporting. However, there are situations which require an MFR, which requires more detailed work and sign-off by an accountant. An MFR can be required in a number of scenarios, including the following: on your initial license application, when you want to increase your allowable turnover, so to increase your maximum revenue, significant change in business structure, when your NTA decreases by 20 or 30%, depending on your category. A number of these areas we have mentioned can get quite complex, and maintaining your compliance with the regulations is critical, because if you don't meet the regulations, your license can and likely will be suspended. So if you're needing a hand, feel free to get in touch. Thanks very much for watching, and feel free to browse the page where you'll find more great audit content.